What's up everybody, GenExDividendInvestor here. In this video I'll be answering 7 subscriber questions that were sent to me. Then I'll end this video with a brief inspirational story that I think you'll enjoy. If you'd like to potentially be featured in my next Millionaire Dividend Investing Questions and Answers video, then follow me on Instagram at GenExDividendInvestor and send me your questions. You can also email me, but I prefer Instagram. I want to thank you for taking a moment out of your day to watch this video. Please consider hitting the thumbs up button, subscribing if you haven't, and click that bell notification. Thanks, I really appreciate the support. Finally, I'm not a financial advisor, so take my responses as entertainment only, not as a way to make financial decisions. Okay, my first question comes from Chris. He said, "Hey, I'm a big fan of your videos. I just had a question. Would you recommend a dividend portfolio or the 3-fund portfolio? I really like the idea of passive income with dividends, but I've heard the 3-fund portfolio is the best route to go for the long run. What do you recommend?" Thanks, Chris. I'm super appreciative that you're a big fan. I don't think there is a best investing route, other than one that aligns to your goals and risk tolerances and gets you the outcomes you want. For those that aren't aware, the 3-fund portfolio is a simple investing strategy devised by Bogleheads, which are a group of investors who favor Vanguard's founder, Mr. Bogle. The 3-fund portfolio is made up of domestic stocks, international stocks, and bonds. It's seen as a simple, inexpensive way to get good returns and have ample diversification. Now, I've heard multiple ways to achieve the 3-fund portfolio. One I've heard is 50% VTI, 30% VEU or VXUS, and 20% BND. It assumes you rebalance once a year to get you back to your target allocations, and it assumes you reinvest the dividends in a drip. Another allocation I've heard is with Vanguard mutual funds. So for domestic stocks in the USA, you could pick VTSAX, which is the Vanguard Total Stock Market Index Fund. For international stocks, perhaps VTIAX, which is Vanguard Total International Stock Index Fund. And for bonds, maybe VBTLX, which is Vanguard Total Bond Market Fund. A common saying is to own your own age in bonds. So if you're 30 years old, then the theory is you own 30% of your portfolio in bonds. So in the 3-fund portfolio, you would put 30% into VBTLX, and then the remaining 70% you could split 50-50 into VTSAX and VTIAX, so each would have 35% in it. You could also go with equivalent funds in Schwab or Fidelity or T. Rowe Price or whatever if you want. Now I found this 3-fund portfolio performance on lazyportfolioetf.com. It shows us that the 3-fund portfolio has a 10-year return of 8.88% versus VTI, which is at 13.48%. So those bonds lower the upside, but also the downside. Okay, now that we have that context, let's answer your questions. Would I recommend a dividend portfolio or a 3-fund portfolio? Well, I think for most people a 3-fund portfolio is actually smarter than a dividend portfolio of single stocks. Why? Because it's easier to manage, and I think you'd be less prone to buying and selling at poor times. Now, why didn't I go the 3-fund route? Because I enjoy owning single stocks, and I enjoy researching my companies, and enjoying what I do has helped keep me in the game for decades. Okay, the next question comes from Hector. He said, "Greetings, Gen X. I hope you and your family are well. Question, if you had to choose only one company among these, which would it be?" And then he listed McDonald's, J&J, 3M, Pepsi, Coke, and AT&T. Remember, just pick one to hold forever. Thanks, Hector. My family and myself are doing great, and we're excited about this next chapter in our lives. If you haven't heard about our big news, then please watch my video called Huge Dividend News about my portfolio to learn what's going on. Okay, if I only had one company to choose, the answer is J&J. There's no such thing as a sure thing, but over the long term I feel really good about them. But even J&J is dealing with some interesting lawsuits, so nothing is guaranteed. Okay, the next question is from Paul. He said, "Hey Gen X, I absolutely love your channel. It's my favorite investing channel on YouTube. I always can't wait for your next video to come out. Thank you. My question is, should I invest when the stock market is so high? If yes, what would you recommend?" Thanks, Paul. That's a super nice thing to say. I really appreciate getting the opportunity to share my investing perspective over social media and to hopefully positively influence people. So should you invest? Well, that depends. I'd first say you should have an emergency fund. Then I'd say pay off any high interest rate debt like credit cards. Then invest what you can afford to lose. Now, the best time to invest is when it's psychologically the hardest, and that's when things have tanked. Unfortunately, I've seen that tons of people will lose interest and stop investing when this gravy train starts going south for a while. Right now, most people are feeling pretty good. But as the market goes down, that's often the best time to buy. Would you rather buy a TV at its normal price, or would you rather buy when it's on sale? The stock market's kind of the same. Something's always on sale, and sometimes almost everything goes on sale during a crash. Remember what Buffett said, be fearful when others are greedy, and be greedy when others are fearful. There's kind of a joke that stonks only go up. And I think in the super long term, that's generally true. But not in the short or medium term, things can go drastically south. And of course, all stocks don't continually go up either. Of course, that's way easier said than done. Buying into something when it's tanked is hard to do. And yet ironically, when the market is way up, like it is now, people find it easy to buy. Now, should you invest varies for each person. I can't answer that for you. I don't know your personal situation or risk tolerances or life goals or whatever. I'd say make sure you're doing your research, and if you find quality stocks at prices you like, then buy. If you're worried we're too high, then you could DCA in rather than lump sum, even though lump sum is historically proven to do better. And as I always say, a low-cost, broad market index fund is often a good investment vehicle. If you prefer single stocks, then a basket of quality, diversified companies is a riskier bet you could consider. You already know some of the stocks I love over the long term, such as Microsoft, as well as J&J, and of course McDonald's. Okay, let's keep on trucking. The next one comes from Peter. He said, "Hi, thank you for making awesome videos on YouTube. I've learned so much and I love your vibe. I understand that I should probably avoid stocks that just have a super high yield, but what about companies that have a product or service that people are ethically concerned about? What's your take on that? What sorts of companies do you avoid investing in?" Hey Pete, you're most welcome. Let's take Altria. I think they're a pretty compelling medium-term buy right now, purely from a risk-reward perspective. However, some folks don't like to invest in tobacco products. My take is it depends on your motivations and your goals and concerns and such. If you're bothered by investing in something, then don't. If you want to invest, then invest. I'm not sure if you meant to say you are ethically concerned about it or if you just mean some people are. If you let your investing actions be dictated by others, you won't invest in anything. Some people have issues with energy companies. Some have issues with defense companies. Some people take offense with investing in the first place. At the end of the day, it's your money and you should do whatever makes you happy and sets your future, as well as your present, on a good path. As long as it's legal. Now, if you mean you're ethically concerned and it bugs you, then don't invest in those companies. Life's too short to invest in things that annoy you. Bottom line, I don't think you should care what others think about your investing, unless those others are your family, in which case I think it's an opportunity to have a discussion and be open-minded and share perspectives and see where it goes. Now, in terms of what sorts of companies I avoid investing in, well, penny stocks are one. I also tend to avoid companies that don't have a good cash flow growth trends or a good balance sheet or whatever. I often avoid IPOs unless I intimately know them. I avoid investing in companies I don't understand or am not willing to research. I tend not to invest in companies that don't have a good competitive moat. I usually avoid investing in companies that are in a dying industry. I say usually because I still might invest if the risk reward and time frame makes it compelling for me. For example, I'm not a huge oil bull, and I don't think it's an ideal generational play, but I do think they'll be able to generate decent returns in my lifetime. I think you should be careful of investing in companies who take on too much debt or are overly involved in litigation or at risk for overregulation. That doesn't mean you don't invest, but it does mean you go into it with your eyes wide open. Okay, let's move on. The next question comes from another Paul, well, Paulie to be exact. Yo Gen X, I'm a total noob and wanting to start a portfolio. I've watched lots of videos, but I'm not sure how many stocks I should start with. What do you suggest? Hey Paulie, I think that's freaking awesome that you're looking to invest. This will be a proud day that you will eventually look back on and be so glad you started. Now anything can happen in the short term, from a market crash to anything. But decades from now you'll look back and remember and appreciate that you started investing. So in terms of what I'd suggest, well I actually have done 2 videos for beginners you might want to check out. The first is called How to Invest in Stocks for Beginners, and the next is called How to Start a Dividend Portfolio in 2020. They're both good ones to watch and absorb. And actually I also recommend How Do You Make More with Dividends to get a glimpse into the amazing tax benefits. So a simple answer might be 6 to 10 stocks. Too few stocks and you can be under-diversified. Too many stocks and it's hard to follow each as a beginner, and you might as well just own VU. Honestly, owning VU is the smartest thing either way. You could also own VU and then a few stocks if you want to do a hybrid strategy. Now if you have a lot of money to invest and you're a beginner, then I would take some time researching more before you jump in. Okay, the next question comes from Big John. He said, Hey Gen X, I have a ton of questions I want to ask you, but I doubt you would waste your time answering all of them. Would you be willing to take a call from me? Thanks, I love your stuff. Hey Big John, thanks. First of all, feel free to DM me as many questions as you like on Instagram or an email or whatever. I'm here to help. I might not be able to answer everything, but I'll do my best to answer in videos like this so that lots of people can benefit. Now, in terms of a private voice call, that's a bit trickier. I do offer a service for my Patreon Kings where we can have monthly 30-minute one-on-one discussions in a private Discord channel on my server, and we can talk about whatever you like, from what you're investing in or want to invest in, or really any topic. That being said, becoming a Patreon King isn't cheap, and of course, I'm not a professional, but I'm happy to share my 2 cents with you. Okay, the last question comes from Nabil, who said, Hi Gen X, I can invest about $100 a month. I'm 23. Do you think I can become a millionaire? What would you invest in if you were me? Hey Nabil. Well, let's do the math and see what comes out using an estimating calculator on bankrate.com. Let's put in 39 years, which takes you to age 62. Let's assume you get a 10% return. Let's also assume you start at $0 and you invest $100 a month. And for simplicity's sake, we'll put in 0% for inflation or taxes. This calculator says you'd get to about 507 grand. It also says you'll have invested only $46,800, so the other 450 grand comes from interest and compounding. Amazing, huh? But you wouldn't make it to 1 million by your normal retirement age with those inputs. Of course, I bet you'll be able to invest more as you make more money, which is what normally happens as people are in their jobs longer. But let's pretend you don't invest more money. Let's see how many years it might take. If you invested for 46 years total, which would put you at 69 years old, then you would theoretically have $1 million. And we see you'd only have invested about $55,000 of your own money to achieve that $1 million. Cool. Now, $1 million is kind of an arbitrary amount, but it's a fun number people often aim for. I bet you'll be able to retire on less than that, because if you're working all the time, you will probably also have Social Security by the time you're 62, and you might have a house you've been building equity in as well. So to answer your question, yes, I am confident you'll become a millionaire. The mere fact that you're watching an investing channel like mine shows me you're passionate to learn, and that passion will propel you to your goals if you stay true to it. Okay, now I'm going to switch gears and tell you a brief inspirational story I found online that I think you'll like. As a group of frogs were traveling through the woods, two of them fell into a deep pit. When the other frogs crowded around the pit and saw how deep it was, they told the two frogs that there was no hope left for them. However, the two frogs decided to ignore what the others were saying, and they proceeded to try and jump out of the pit. Despite their efforts, the group of frogs at the top of the pit were still saying that they should just give up, that they would never make it out. Eventually, one of the frogs took heed to what the others were saying and he gave up, falling down to his death. The other frog continued to jump as hard as he could. Again, the crowd of frogs yelled at him to stop the pain and just die. He jumped even harder and finally made it out. When he got out, the other frog said, "Did you not hear us?" The frog explained to them that he was deaf. He thought they were encouraging him the whole time. Moral of the story? People's words can have a big effect on others' lives. Think about what you say before it comes out of your mouth. It might just be the difference between life and death. Now, I want you to really reflect on the power of your words, which can build someone up or tear them down. Be the person who is constantly building, helping, promoting. If you see someone is down, try to lift them up. A kind word can do wonders. Thank you so much for watching. I'd really appreciate it if you click that thumbs up icon on this video, and I highly recommend that you join my free Dividend Discord chat server, which has almost 5,000 investors in it and it's growing all the time. The link is in the description below if you'd like to join. Remember to click the heart emoji to get authorized once Discord verifies your phone number is legit, or you can wait for me to manually authorize you. Also, if you'd like to more directly support me in my journey to spread the positive message about dividend investing, then please consider clicking on my Amazon affiliate link in the description of this video, and then go shopping online. As an Amazon associate, I earn from qualifying purchases, which means I get a small commission after you click on my link, and then you shop for whatever you need, and it doesn't even impact the prices you pay. So it's like a simple way you can leave me a tip for this video. Another great way you can support my content is via signing up to be a Patreon member. By the way, if you'd like to ask me a question and potentially be highlighted in my next Millionaire Dividend Investor Questions and Answers video, then follow me on Instagram and DM me your question. Thanks, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.